So last time we did an episode, it's actually episode 132. You gave a lot of big lessons that the audience really enjoyed. But one part you spoke about was the Frontline original memo, I think. And you said, Frontline is all about saying precisely where we are in the cycle and also, executing. So if this tanker party is going on right now, where are we in the party? Like, is it early in the party? Should we stop drinking alcohol, switch to water because you don't want to be the last one closing the party. So if you get the analogy, because this super cycle has been talked about a lot. And of course you get sentiment, momentum. So where do you define this cycle in terms of where are we?
Well, I think we haven't, we haven't even sat down for dinner yet, to be quite honest. So, and I've had this, kind of, for this analogy, I imagine, we're having, drinks first, then we sit down for dinner, then obviously we're going to do some dancing and all that stuff. And in Norway, as you know, we do an after party as well. So we actually don't really go home until the sun is up. But we haven't sat down for dinner yet, I believe. And there's actually a few indications about, kind of backing that, because over the last couple of months, we've had what some people would refer to as ordering frenzy. There's been a lot of Suezmaxes, a lot of VLCCs being contracted. On the LR2 side, you could say they started much earlier. But not necessarily from a kind of market point of view, I think, because it's more relating to what shipyards can actually build the various asset classes. And the bigger the asset classes are, the fewer yards can actually build them. And VLCC is quite big, so you need the berth and the size kind of in order to build. But looking at that now, so there's been a frenzy. 2026 is sold out. 2027 is actually starting to, I don't think it's sold out for any, I still think there's possibilities, at least from certain yards. And if you move maybe what's at least perceived the lower quality yards, you could probably get a lot of stuff done in 2027. But, that gives us, we're only, in the first quarter of 2024. So there are a few years ahead of us. And also, if you look at how many ships who are not, the kind of the aging profile of the fleet is only getting more and more prominent. I think basically what we see now is that at least for the next few years, we're not really going to have any significant fleet growth in the bigger segments. On the LR2 side, yes, but LR2s, again, as I've said in my call and I've said a few times, LR2s, due to coating, tends to have a shorter lifespan than Suezmax and VLCCs. So you would more look at the 15-year threshold. And then we're actually in the generations that were delivered kind of late in 2000, so 2007, 8, 9, which are big generations for LR2s. So basically they will also have this kind of, the effectiveness of those fleets will be reduced quite heavily going forward. So we actually need those 45 or 50, whatever LR2s are on order right now. We need them to come. And we need the VLCCs, we need the Suezmaxes as well. Because I think if there's anything that's happened since we did this call the last time, is the recognition of the fact that the green shift is not happening quickly enough. And we all obviously want alternative energies. We want clean blue skies. We want our children to grow up in a world, with basically less pollution. But it doesn't happen as quickly as people would have wanted it to.
So in this equation where you have, the order book, the vessels, and the market, it's fair to say that you're very comfortable with this market perspective since the order book. But on the other side of the equation, is that as easy and predictable? Because markets, we can dive into, of course, the market perspectives, but there is a lot of unknowns, of course. So how would you if you take that equation?
This is definitively a supply story. So it's not a demand story. Demand is extremely difficult for us to understand or analyze. I think just the volatility in oil price itself, as I touched upon 2 years ago as well, it's not a very efficient market. But I think kind of what we've seen is that overall energy consumption is going up. Incidentally, kind of around the time we had the call 2 years ago, DNV, they give out their annual report, which is, I think it's called Vision 2050 or something. And where they try to analyze and try to give estimations of how the energy mix is going to look in 2050. And they also then have ideas about peak oil demand. When does oil demand start to reduce, replaced? Everybody knows energy demand is going to grow, but what's the mix going to be like, right? And 2 years ago, they actually had us being at the peak in 2019, 2020. Well, actually, to be fair to them, probably 21, because the assumption was that post-COVID, the peak oil demand, the hydrocarbons in the mix, had peaked already. It's quite obvious that never happened. So overall, energy demand does follow the estimated path, and grows more or less with population growth, and obviously with people becoming more and more wealthy, actually affording to have an EV, for instance, or affording to replace firewood with LPG, for instance. So that's happening, but oil as a part of the energy mix is not reducing; it's actually increasing. So when I think kind of most analysts and experts looking at this basically have to gradually readjust their models, and they see, and it's not like necessarily it's a disaster for the world, because we are actually capturing more of kind of the bad stuff from our energy consumption, but it seems to continue to grow, and I think if you ask, well, if you look at, is it BP that do their huge analysis, then that kind of peak is starting to move closer and closer to 2040, even some putting it closer to 2050 now. So we I think on average, last time I checked, last fall, I think the average, if you put all these numbers together from the various analysts, we were peaking around 2037 or something. Now it's moving closer and closer to 2040.
Yeah.